Welcome to Old Mutual's Capital Markets Day. My name is Deliwe Ross. I'm the Human Capital Director and your MC for today. I've just been reading the recent updates we've put out to the market about how we are recovering from the impacts of COVID-19. What we are excited to share with you today is how we are transforming the business along the themes of rectify, simplify, and amplify. I'm sitting here under this beautiful tree at Old Mutual House in Cape Town, reflecting on our 176th anniversary this year, and that it has been 3 years since our return back home to Africa. During the course of today, we will be sharing how we will become our customers' first choice. The combined strength of our portfolio will meet and provide for our customers' financial needs and deliver shareholder value. But more on this later. Are you ready? Today's agenda has been developed to ensure that you walk away with an understanding of our truly mutual strategy, which we summarize as CARES.
We're going to share with you the journey we've been on since 2018 and what we've been up to in the background. And we're going to explain how we see our role in the world and make you believe in all of this as much as our staff, management, and I do. We put the 8 battlegrounds in place as an initial call to action after the listing, recognizing that they were at best medium-term in nature and that we would need to do more work to refine our longer-term strategy. We needed something that would accommodate the accelerating pace of change and technological innovation. We realized that we needed to embrace speed and agility while establishing a victory condition that could keep us pointed in the right direction as we moved forward. A fundamental decision was to make our strategy unapologetically all about our customers, in the belief that if we become our customers' first choice, we will deliver a quality business and sustainably best-in-class returns to our shareholders. So we agreed to define becoming customers' first choice as our victory condition. We believe that in order to win in the future, we need to think and deliver differently from how we've done in the past. The metrics of success are changing. Yesteryear's businesses were measured on and judged on hard numbers, profits, margins, targets, turnover, almost at the expense of everything else. The Gordon Gekko School of Business we agreed is good. Businesses that survive this crisis and the next will be the ones that customers want to survive. They decide. This is a big strategic shift, and it's long term. So we realized we needed to break this down and define a tactical 3-step approach that can be understood and executed throughout our business and be allied to how we approach every aspect within it: procedures, products, solutions, systems, etc. Together, the 3 steps create a flywheel effect. They're not strictly linear or sequential, but they do logically follow each other. And these steps are: first, rectify, then simplify, and then amplify. We're hanging our hats on this. Our hats are collective futures, careers, and bonuses.
At Old Mutual, we use the phrase purpose-led technology. By this, we mean technology focused on the outcome of excellence in customer and advisor experience. Purpose-led technology helps us reinforce experience, build our brand, and ultimately accelerate our business performance.
Our success will be driven by doing what we do because it is right. Ultimately, that is what Old Mutual's digital transformation is about. It's doing the right thing for the right reason, viewing our business through the lens of our customers and not the other way around, and becoming the Old Mutual our customers and advisors want and need us to be. What this means is that our customers will look forward to an improvement in the ease of use and understanding of our products and services, increased product relevance, and the business will look forward to a reduction in waste and clutter.
We delivered our 2017 to 2019 commitment of R1 billion in run rate savings. And we set out a commitment to deliver a further 750 million between 2019 and the end of 2022. We will achieve this by digitalization of our customer and advisor experiences, driving excellence in experience and lowering operating cost.
As at May 2021, we had overtaken our pre-COVID numbers on the risk sales, which is significant. On the credit life and savings side, we are still seeing the numbers below that level. So overall, our sales are slightly behind. But I still believe that this is such a tremendous recovery, which will continue. Also on the back of our productivity recovery. Now the question is, are we chasing growth for the sake of growth? Or is it about being profitable as we grow our market share? And no doubt about it, we need to deliver profitable market share growth.
We will increase the number of our current 3.2 million customers who have more than one need met to 50% in 10 years' time, as Sanelisiwe mentioned. Because that's where the real valuable growth will come from. Growth won't come only from insurance. It comes from making sure that you meet all the financial services needs of the customer. We will win in terms of extracting as much value for our shareholders through that integrated financial services strategy.
I'll send this question to Clarence. Do you have an expectation of how the digitalization of the advisor process could improve advisor productivity? Clarence, over to you.
Yeah, so we did a piece of work with my good friend Karen as part of our advisor digitalization enablement project. So what came out of that is that we are likely to save 60 hours per advisor per annum through the digitalization of the advice process. And in the MFC space in particular, we could increase productivity by something like 0.5 policies per advisor per week.
Everyone in the industry is constantly upping their game, doing new things, doing different things. And it takes continued effort to stay ahead of that curve. Now, we've been working on our proposition and our product sets for a number of years, but we've taken too long about it. I think that's because Old Mutual Protect, which we refer to as OMP, and our upcoming savings range are not just new innovative products. It has been a complete overhaul of our end-to-end business process and technology stack to move us into this future-fit digital world. So we've replaced the product admin system, the quote system, the service processes, the application and underwriting systems, the advisor front end, all to take us from what was largely paper-based and clunky to online and automated.
So is it better for clients? Absolutely. Our advice-led approach puts clients at the front and center of our business, making sure that they get the outcomes they require. Is it better for advisors? They have significantly better client retention because their relationships with their clients are much deeper due to the advice process, and they are able to charge higher advice fees because their clients actually see and feel the value of the advice that they provide. And finally, what does this mean for investors? At the outset, I mentioned that one of the shifts we made was that we were going to focus more on share of wallet and not just share of clients. Going forward, I believe that we now have a profit base which is far more robust and actually a reasonable base on which to project future growth.
We have an integrated approach to our business, finance and risk strategy in order to align the group's scarce resources to drive shareholder value. This stood in our value drivers being revenue growth, operating margin, efficiencies, which is the focus of this presentation, our competitive strengths and execution and delivery.
These simplifications have enabled us to return significant value to shareholders since listing. We returned just under 39 billion rands through the Nedbank unbundling in 2018. We completed special distributions of just under 10 billion rands, which included a share buyback and special dividends. And lastly, we delivered ordinary distributions of just under 13 billion rands. That gets us to a massive total of 61 billion rands of value that we've returned to our shareholders since listing. But importantly, we made those returns whilst maintaining our strong balance sheet and investing in the core operations.
As you've all seen in the announcement we made last night, we've made a decision to unbundle the 12.2% of our Nedbank holding that is held in Old Mutual Emerging Markets. At yesterday's closing price, this was worth approximately 10.4 billion rand. The key driver of this decision was that our discussions to expand our strategic relationship with Nedbank were not advancing. The most important thing I wish to highlight is that whilst the unbundling has optimized our future return on capital, our capital position remains appropriate to support our growth ambitions and maintain our dividend policy. We've got a clear execution framework in place in the Rectify, Simplify and Amplify framework, with value drivers as the engine. We've optimized our balance sheet significantly, which should allow us to deliver a sustainable enhancement in our RONAV.
Thank you, Ian. And thank you to all of our presenters today. A huge thank you to all of you for joining us today. This brings us to the end of our 2021 Capital Markets Day. We will see you again at our interim results in August. And until then, I say bye danki, asante sana, and enkosi kakhulu.